Hey everyone, welcome to your daily update for Sol and BTC. Uh, first, first observation this weekend, which is quite interesting, is that the liquidation map does not look like a weekend liquidation map. So normally, if you've watched prior videos, it's usually just a very symmetrical thing that just looks like someone's painted it, and it's completely false. It means nothing. Whereas this one actually has structure on the liquidation map. So yeah, I don't know quite what to make of that, but it is different. So overall liquidity is pretty even on the 1 day. It's not really what you want to see. You kind of want to see a fast wick down and then a fast move up. We haven't had that, so therefore there is potentially more downside to come. But when we start to look at the 7 day, you can see that the liquidity is really starting to pile up to the upside. Now, if they can make a quick move up, they'll trap a lot of these shorts. So on Sol, even if they just did a quick move up and landed into that sort of 144, 145 area, that would give them the ability to basically have all of these shorts trapped all the way through to sort of like the 150s and higher. So we might see a short squeeze. Looking at the 30-day liquidity, again, very bearish. Most people are sitting pretty happy and pretty in their shorts. But again, if they do make a bounce, and there are some big levels down here, we're actually creating some daily support today as well, and I think they might be looking at actually doing a bounce. So if they were to head to the downside, something around that 92 area would pretty much wipe out what is to the downside on BTC. And if they would go to the upside, the 30-day liquidity chart pretty much stops at about that 106. But obviously there is positions above that and there's liquidity above that, but that's kind of what it's showing. It's all very, very confluent with some of the bigger levels that are on the charts right now as well. So yeah, it's almost like it's building up to something. And if they were to swipe down on Sol, they're building this daily support at about 136, 137, and there's a daily hold candle down below that they did not quite touch in the last couple of days. They went down to it, but just left a little gap, and that's sort of around that 135 area. So it just seems like maybe they'll do like a one final sweep down, smack into that, and then we have pretty much, as long as the weekly closes okay, we have a roadmap up to the 170s, but yeah, liquidity sort of shows that would then mean everything is gone. Okay, let's have a look at these charts. Okay, so today we have a 1 day, an 11 day, a 29 day close that are worth looking at. And we might just have a quick look at some of the closes from yesterday as well. But Sol BTC strength is sitting just under where we want it to be. So we want it to close back up over 14660, and then it can have another crack at trying to move up and break these trends. As it currently stands, it's pretty much showing the signs of a range rejection to the downside, where it's fully engulfed everything, including the wick, and then it's come back up. It's rejected off the backside. But it's had two goes at it, so definitely it's right on the line of trying to fight back, that's for sure. Looking at the weekly we sort of want to see get back up over that 14853 level, but there is a range trend coming through here, and it's down around that 14156. So if they are going to have a one final dump and then a pump back up to try and trap some shorts, it wouldn't surprise me to see that weekly candle come down here and hit that range trend, because yeah, that propelled it, as you can see from there, that propelled it to the previous local high. So that would be a pretty good target for support. Okay, let's have a look at the safety assets. So this is where things start to get really interesting, is that although you could argue all this bearish stuff right now, the safety assets are actually retracing. So your USDT dominance and your USDC dominance are both negative. BTC dominance is negative, and as far as structurally, what this is it's rejecting a range trend. It's rejected a break level. Because it hasn't come back up to the 67.9-ish% break level, today that becomes an origin resistance level. So it's going to be under a range trend, under a downtrend, under a support trend, and have another resistance level sitting above it. So it's kind of yes, it's compression, so obviously it's a wedge in here because it does have these support levels below, but this is not a bearish sign for alts. This is exactly the opposite. Very sneaky. And when you look at the totals over here, you've basically got total, but also total excluding stables, total excluding stables, total 3, and others. Now, others is up the most for the day, and that's the absolute lowest types of coins, and that's up the highest. But basically, it looks like, yeah, it actually looks like they are sneaking some bit of money through into the alts. Looking at the weekly actually failed to get back to that 68.47 level. So what I find quite interesting about that is that if we were to make an assumption that this ginormous wick here shouldn't be on the chart from October 10, then this week, if it closes here without touching that 68.47 level yet, again, actually converts that into a high time frame resistance level. And the fact that it's creeping up from the wrong side of the trend means that the next weekly candle that hits that is almost certainly going to dump. So that's a very interesting little thing that could play out as of the week. All right, let's have a look at the total. Okay, so the bull case here is that we're not actually closing in distribution. So it's come up and it has hit the backside of resistance, and it's not hard closing it as resistance. So as long as we then have a good day or two, then we can actually get back up above that because it's not hard closed it yet. The bear case here, of course, is that we're actually going to create a very steep downtrend from this candle all the way down to here. So it needs to just fractionally push up, and it doesn't have to be much. Like we're currently sitting at 2.92. If it pushed up to about 2.93, then the next candle will open on the top side of that trend, and it can then actually have a chance at breaking its first trend, which in what is a very sort of parabolic downtrend that it's been in. Now, where it is now, it would be opening on it. If it pulls back anything more by the end of the close in the next, 46 minutes. How am I going to get this video out? Yeah, if it pulls back any more than that, then it's going to be on the underside of that trend, and then it could have a rejection. It hasn't actually utilized the range trend down here at 2.86 for support yet, so it's got new support underneath it, which it hasn't used to move up. It might actually be in a breakable state. Just, yeah, keeping a bit of a close eye on that one. Okay, and then looking at the weekly hasn't hit the trend yet. The weekly, if it closes blue, will move the trend into a supportive position, and it is currently underneath the downtrend, the range trend still. So the weekly could have a pump if the trends move, and it could even have a pump if it just dips down and hits that on the final day. So if we do get a dump, the dump should, in theory, bounce off these levels. But really, we want to see the weekly back up over 3.07 trillion. Okay, let's have a look at Sol. Yeah, so again, bull case with Sol is that it hasn't actually even managed to get to its support. So there's strength in here on the one day. It's got a trend down below that it can bounce off. It's creating an origin support level at 137.082 on the daily by not coming back down and touching it in the next 45 minutes. It is creating a sharp array of the downtrend, which at this stage it is fair to say it's going to close under that. So it's going to be in this heavily compressed wedge. Now, it could break to the downside, absolutely possible. It could also break to the upside. It's totally 50-50. So you may see a wick down and then a move back up, but yeah, it's still got a whole candle. It's going to have a new origin support level. It's got a trend for support, and really it's just going to be a very steep downtrend that it's got to get through. So that'll be yeah, if that even just pushes up just a bit more by the end of the day, it doesn't have to go up much, like even just the 141 again, if it gets up to about 141, just by some little move in the next 45 minutes, then it changes that quite a bit. Okay, what do we got on the... Okay, so the 11-day, the trend is going to break. All of these trends at the top, which are currently resistance, are going to shift to the underside. We could bounce those. We'd have 149 range trend, we'd have prior broken trend at 163, and we'd have the backside range retest at 175. This one time frame could actually literally play out every single target that we've looked at all week. So I wouldn't class that as a bearish close. The only thing really is that they can reject off these things if it pushes up, but it's not to say they will. There is no downtrend because we don't even have an accumulation candle, because it's just been constant down, 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 which looks bearish, but at some point you have to create a trend, you know? It's no different than when we were back here. We had this, we were just bearish, 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 all the way down, and then we created that trend, and we created it in such a way with a hold level that we were able to open on the top side of the trend, and that started the move up. You know, and then what happens, we target a hold level, and so, you know, you could have just marketed in a swing short the moment this candle closed, and then you would have got that move there, you know, up into that hold level. So I think it even went to nearly the greedy part of the hold level there. So yeah, could this reverse? Absolutely. You know, just like that reversed. Will it reverse? Don't know. The bearish part is that it has hit the break level. So for it to maintain a reversal, it really has to not touch that break level again in the next 11 days. Okay. So if we have a look at the 29-day, so 29 days engulfed, it's rejected. It needed to meet a minimum obligation of 147.330. It's done that, but it hasn't engulfed the range creation fib, which would mean that if the next candle doesn't engulf 130.342, it's probably going to try and reverse. Now, the bearish stuff here, unfortunately, is that we are under the range trends. Now, once again, not hard close. You can go under range trends like you did back here. So we went down and then we went back up through it. So there's no reason why we have to reject off the back of it, but it is a 50-50 scenario, right? So when a trend is hard closed, it is either resistance or support. When it is not hard closed, it's making a choice. And you know, we don't know what the outcome of that choice is at this stage, but if it turns into a sweep and a recovery of the trend, and then it's going to come back up here and it's going to target this 177. So that's, yeah, I'm almost sounding bullish on Sol for a little bit of a pump, but that it could just be a scam pump. And I hate to say it, BTC still looks pretty bad. So okay, let's have a look at BTC. So BTC landed on the origin support level. It is not making a hold, so that's yeah, that ain't good. So normally what happens, you'll hit an origin level, you'll engulf a candle, you'll create a hold. Okay. And then that creates the start of a range, and then it starts to range up, but it hasn't done that. So it's still a little bearish. It doesn't mean that it doesn't come back down and do it again, and maybe the next one does it. It is creating a steep, very steep new downtrend today. And if it just sneaks up just a tiny, tiny bit, like, you know, even 96.7 even, it would be able to open on the top side of that trend. So it is a bit bearish that it hasn't created a hold, but that would have been a big move. Like for it to actually have fully engulfed that candle, it would have had to have hit that range trend and gone back up over 99. And the problem in BTC's case is it, hit that origin level and then go back up over 99. The problem in BTC's case is that there was actually some levels through here, which is this one, from February at 96,603, which actually created that rejection. So it technically bounced between two origins, and it's just confirming to us at the moment whether this one is going to become resistance. So keep an eye on that level as well, because it could reject off that again when the candle starts to go up. Okay, looking at the 11-day. So there's a doji up here on the 11-day from the 4th of June. Now, assuming that doji represents distribution, then what's actually happening right now is we've retested a broken range trend. That's the assumption that that would be distribution. If it is actually meant to represent accumulation, because dojis are indecision candles, they can really mess with TA. So assuming that it is distribution, it's a retest. If the next candle opens where it is, it could bounce that trend and then come up here to target, the 100K or the 100, roughly 100K would probably be the appropriate place for that to target. It's probably based on all these engulfments. Yep. We're also engulfing the 1618, so it may push up. There's another reason really for it to push up to this 100K or 100.9, and then it could reject off that and then try to come back down to 88.496, which has got a lot of confluence as a level that requires retesting. So yeah, BTC just seems so bearish. Okay, and looking at the 29-day, it's going to open on the wrong side of the trend. Let's see whether this is capable of creating another dump down to the 89.9. It may head to 100.6 first. So basically, Sol looks like it wants to go up. BTC looks like it wants to crash. And unfortunately, because BTC is the king, if BTC crashes, Sol will go down. So it's pretty hard to make any choice as to whether to do anything as far as those altcoins go at the moment. Now, if we flip this around the other way, if this candle, which was engulfed here and created the move up to 124, 125 area, it's been retested here at 94. So, like I said before, trends are not resistance till they're hard closed. You can be below them, like we were here, like we were here. You can be below them. And it is possible that we just bounce off this and head up to 106. So that is possible. So it's really just, at the moment, you've got a control candle here that wants to dump. You've got a control candle here that wants to push it back up. And it's a fight between this whole 90, 90s, mid-90s area, where on one hand, they're wanting to push it up to 100, 104, 106. And on the other hand, they're trying to push it down into the 80s. So, and if we look a little bit, if we zoom out a little bit further, it's all based off this range that's over here. And we haven't lost the base of that range. So we have tested it one time, which was back in February, and that's what led us up here to the 125. But, if we test it again at 83K, then that could lead it back to 104 as well. So if this is a bear market, there will probably still be a bear market rally, and that's, if you look at this range, it would, be like a head and shoulders, if you will, could get created. Although I don't like head and shoulders, they're all levels. So yeah, BTC looks bearish, Sol looks bullish, but the tail can't wag the dog. All right, I better get this video out. Let's just take a very quick look at Tesla. Okay, so obviously given it's weekend, nothing's really changed, but just in case you didn't catch yesterday's video, we have accumulated back up to the downtrend. We've accumulated back up over the range trend. As long as it can sneak over top of these trends, it can keep trying to push up, but it's also in quite a parabolic downtrend with a lot of resistance sitting up here. So it's really got to recover that 411 level at a minimum to get back up inside that top range. It hasn't lost it yet because it hasn't hard closed it. And what it found was basically this old origin support level from all the way back in January, which is what gave it that bounce. So looking at the weekly, if the weekly close, well, actually the weekly will close, won't it? Because there's no market. But yeah, if the weekly closes under that 415, I guess it comes actually down to probably the open. that's why stocks are hard. They can open and close in different places, right? So effectively that 4508 level could try and push the price back down to the 383. If it engulfs the 383, it'll go to the 351. If it engulfs the 351, it'll go to 319. There will be a trend shift to the bottom side here. That's going to help to try and support the price and send it back up. But it's, unless it recovers this range trend through here as well, then it's time to be a little bit bearish on Tesla. Looking at that, it's trying to build support, but it is still under resistance, and it's its second sweep of that range, because you had your first sort of wick up and sweep there before this drop, which created the trend, and then this is your second sweep of the range, which has created this drop, and that's going to create that trend. So as you can see, that's your wedge starting to form. So yeah, you could look to long the trend if it hits the trend, but just don't necessarily expect it to get back above that 4.5 level, because that would likely reject. Right, that's Tesla. Cool. All right, well, good luck, and we'll catch you again.